With the housing market on the upswing, everyone is eager to know exactly what will happen in the next 12 months. We caught up with AMP's chief economist, Shane Oliver, for his insights into where the market is at and where it's headed.
My feeling is that this current upswing we're seeing largely being driven by lower interest rates, and that's often the key driver of swings in the housing market. Probably has a bit further to go. I think low interest rates are going to be with us for a while yet as the economy adjusts to a slower growth pace after the mining boom slows down. And so we really need to try and stimulate the economy, and one of the best ways to do that, doesn't always work smoothly, is to cut interest rates, and that's what the Reserve has been doing, and I don't see them raising rates for some time yet.
Oliver says that one problem is that Australian house prices are already high relative to Australian incomes.
The problem in Australia is that we're starting an upswing in the housing market where prices are quite high compared to people's incomes. We pay at least double relative to our incomes what an average American would pay to buy a house. So we do have a quite expensive housing stock in Australia. That I think will put a bit of a limit on how far house prices can go up from here. Flip side though is that we haven't built enough houses. There's a limited supply out there. So I think the more likely scenario is that we spend several years where prices sort of trade in a range. At the moment we're going through a bit of an upswing. A few years' time interest rates will start going up again. They might come off a little bit.
Oliver predicts the upswing has further to go, but wouldn't go as far as to call it a bubble.
My feeling is that boost to the housing market from low rates probably has a bit further to go. Over the next year we'll probably see average house prices around Australia rise, I'd say somewhere around 5%, possibly as much as 10%. I wouldn't get overly excited though. I'd be loath to call this a bull market or a boom or a bubble. And in fact you don't really want to see that. If we get a bubble, we all know how they end. They can often go bust. At the very least the Reserve Bank will be raising interest rates again. So my feeling is that with housing affordability, at least house prices still quite high compared to people's incomes, that the rate of growth will be capped. We're not going to see the sort of surges we've seen in the past, but by the same token I do see more upside over the course of the next year or so.
This is Hannah Temple reporting for YIP TV.